last lecture, we had done this, correct? It was completed up to over funds, right? Just have a look over this. Yeah, up to total capital employed or total sources of funds. So here it was completed, right? Okay, make a note of this. Sources of funds, that is from where money comes in, collecting funds. So it is through equity share capital, preference share capital, that is by issue of shares. See this part. Then reserves and surplus, second category. And third, loan funds, borrowed funds. Okay. Then how do you get this total capital employed? Right here. 1 plus 2 plus 3. Okay. You know, 1 plus 2 plus 3. So this is the total. Total capital employed. Owner's fund plus reserves and surplus is less, add borrowed funds. So what am I adding? I'm adding this. This is called as owner's fund or proprietor's fund. Take a note of all this right here. Owner's fund. Okay. Outer column value. The one I am highlighted in yellow is your owner's fund. Okay. And this total of this 1, 2, 3, total of this inner column, which you will take it in the outer column. Okay. So what is this? This is your owed funds, that is borrowed funds. Okay. Clear everyone till here? Acknowledge it in the chat box. Till here, is it clear? Sources of funds total is clear? Okay, fine. Yeah, good. Thank you. Next. Come to application of funds. Okay, the money which we have collected, we have to apply it, invest it. Okay, so where are we going to apply? We're first going to apply it in fixed assets. Okay, fixed assets. I will take tangible as well as intangible. Tangible fixed assets, intangible fixed assets. Anyone? What are tangible assets? What are tangible fixed assets? Acknowledge it in the chat box. Write it in the chat box. What are tangible fixed assets? And give me 1 2 examples also. Okay, assets that you can touch and feel. Yeah, that's car, fan. Okay, yeah, Vipul. Yeah, assets and which we can see. Okay, fine, good. Yeah, correct. Land, building. Yes, correct. And what are intangible assets? Intangible fixed assets. Yeah, Vipul and Vijay. Yeah, right. Assets which can be touched and feel and can be seen. Okay. Intangible assets ka example. Okay, goodwill. Anyone? Any other example of intangible fixed assets? Intangible fixed assets. Yeah, very good, Harsh. Yeah, copyrights. Anything? Goodwill हो गया, copyrights. Anything? Yeah, Shubham, right? Good. Patents, yeah, Vijay, right? Hmm. Good. So that means you'll know what is a tangible and an intangible asset. Great. So total it, inner column, and take it in the outer column. So this is my fixed assets total in the outer column, tangible plus intangible. Next, long-term investments. Okay. That means just write it down. What are long-term investments? Investments made for more than 12 months. Okay. If it is less than 12 months, then it is not long-term. Then it will come under short-term under current assets. Okay, so make a note of this. Long-term investments, second category under application of funds. Next, so long-term is also done. Next, working capital. Okay, and under working capital, current assets and current liability. Okay, so what is working capital? It is the difference between current assets and current liability. So this is the equation of working capital. I'm writing it here down. Working capital is equal to current assets minus current liability. Okay, so if you look into the statement, see current assets minus, can you see here? Minus less current liability is working capital. Clear? Okay. Working capital is current assets minus current liability. Okay. So look here. You see this outer column, current assets. See this outer column, current liability. Inner column, I mean. And then outer column, working capital. Okay. Then current assets are divided into quick assets and non-quick assets. I'll tell you all this later. First, just make a note of it. And current liability is divided into quick liability and non-quick liability. Yeah. And then add this three, 1, 2, 3. Okay, again, look on the, at the screen. Here at this key, what are you going to add? What are you going to add? This current assets, fixed assets, long-term investments, and this working capital. Three things you're going to add. Okay. So these three things will give you what? Total capital employed or total application of funds. So right here, 1 plus 2 plus 3. Same thing what we wrote up. 1 plus 2 plus 3. Okay. And total sources of funds should tally with this answer. Total application of funds. Is it clear? Total sources of funds, this. Total sources of funds, 1 plus 2 plus 3 should tally with this. Total application of funds. Okay. Yesterday I had told you one formula, if you remember, which one? Asset equal to liability. Correct? This equation you have done from FIJC. FIJC may you must have learned this. So this is nothing but sources of funds as per the vertical statement. As per the new format of balance sheet. This is what? Sources of funds. And as per the new format of balance sheet, this is application of funds. Okay, that is why this two has to be equal. Clear? Agreed? Okay, note this down. Note all these things down. Okay? Is it clear till here? Acknowledge it in the chat box. I'm again and again saying this is very important for sum solving. Even the next chapter, which I will be doing ratios, that is also based on the first chapter. So the first chapter has to be very clear to you. Any doubts, please write it in the chat box. I will clear it up. Okay, but don't keep any doubts pending of the first chapter. Otherwise, you will never understand the second chapter. Okay, second chapter is connected to the first chapter. Okay, yeah. So assets equal to liability. So the statement is clear to everyone. Okay. So the vertical balance sheet is clear to everyone. So this is the new type of balance sheet now which we will be doing. Okay. पुरानी balance sheet भूल जाओ. Okay. पुरानी balance sheet से financial accounting. You have a subject FA, financial accounting. Remember for that. But the new balance sheet you will remember for management accounting subject. Am I clear about this? Okay. So this is my new balance sheet known as the vertical balance sheet. Okay. Easy. Is this balance sheet easy or the old balance sheet easy? Write it in the chat box. Which one do you find easy? The old one you find easy because you have been doing it since 3 years. FIJC, SYJC and FIBcom. But if you compare, even when I had learned it, earlier I found the old balance sheet better, but then later I found this balance sheet more logical. I mean, you don't have to mug up anything for the new balance sheet. Okay, even a non-commerce graduate can understand this balance sheet. So now let us come to this part, which is important. So this I had taught you last lecture. I had told you about this. What are the components of a vertical financial statements? What does a vertical financial statement has? So what does it have? It has a vertical revenue statement. That is your P&L account, the new format of P&L account. Then it has the vertical balance sheet. That is the new type of balance sheet. Then it has cash flow statements. So no more cash account, bank account, cash book is required. Instead, we prepare a cash flow statement and fund flow statement. Again, it is also related to cash only, but not actual cash, outstanding cash. Okay, cash which is not received. Then notes to accounts. I'll come to this. What are notes to accounts? Okay. So these five elements make your financial statements. So in future, if you work anywhere in any company, and if they tell you you have to prepare financial statements, so that means you have to prepare these three things and give it to them. One is the vertical P&L, then is the vertical new balance sheet, cash flow statement, fund flow statement, and notes to accounts. Okay, so when you work in companies, these are the five things you learn. Okay, anyways, you will learn it here also till your Bcom. But when you practically go and do your job, these are the things you should know to prepare. Okay, so look at this. Requirements of Schedule 3 to the Companies Act 2003. So now no more the 1956 Companies Act is there. It has been changed to Companies Act 2003. Okay, I hope you all know about this. Okay, so see, financial statements. What have they said about financial statements? It is a statutory requirement. What do you mean by statutory requirement? मतलब things which are compulsory. Okay, it is as per law. You have to prepare it. Okay, then accounting standards have notified accounting standards notified by MCA. Now, what is this MCA? I'll tell you. MCA means Ministry of Corporate Ministry of Corporate Affairs. Now, what is this Ministry of Corporate Affairs? They are the body under which all the companies which are established in India, which is formed in India, is registered with them. Okay. So, what is Ministry of Corporate Affairs? It's a legal body. It's a legal body, a statutory body, which has all the companies which are registered in as per the Indian Companies Act 2013. Okay, so which is that accounting standards notified by NCA. And what are accounting standards? Your accounting standards 1, 2, 3, so like accounting standard 32, which is given by ICAI, Institute of Chartered Accountants of India. But who notifies it? It is notified by NCA. Then, see, same thing which I told you on financial statements में क्या आता है? Statement of P&L. Statement of P&L means revenue statement. Balance sheet means the vertical balance sheet. Notes and other statements. Notes to accounts, the fifth one. Okay, notes to accounts and other statements means fund flow statement and cash flow statement. So actually there are five. Okay, 1, 2, 3, 4, 5. Is it clear? Acknowledge it in the chat box. Is this clear? Whatever I explained just now, acknowledge it in the chat box. Okay, so no, that means no doubts still here. Okay, fine. Thank you so much, students. Ankita, then Rawat, Surbhi, Vipul, Shubham. Yeah, thanks, dear. Thanks for acknowledging. Okay. So whatever I have said right now is clear to everyone. Now, next, students, you should know this. Yeah, this. Next, you should know this. Okay. So whatever is important, I have just, copied that information for your relevance. Okay. This, whatever you have seen it on the screen, this is actually from the ICAI book. That is your chartered accountants. This is a CA ka book from where I have taken this extract. Okay, why? Because I feel it is important and you people should know about it. Okay, so that is why I took up this extract. Okay, so whatever is important, only that part I have put it. I have taken a screenshot and I have pasted the same part of it. Okay? So this is from the ICAI book, Institute of Chartered Accountants of India. Okay. So see what is important. The major information contents of different components of financial statements are explained below. Okay. I also told you first is the balance sheet. Okay. What is balance sheet? It provides, gives you information about the liquidity and solvency of a company. Okay. Next, statement of P&L account. That is the revenue statement. What does the P&L account show? It presents the results of operations of an enterprise for an accounting period. Okay, that means it helps you to calculate what profitability of the company. Am I clear? So whatever is important, I am just highlighting that part of it. Okay, next, cash flow statements. This is not in your syllabus, but still you should know a little bit of it. Maybe it will be there in the next semester to you. Okay, so this semester it is not there, but next semester, obviously, till you complete your TY Bcom, by that time you will study cash flow statement. Okay. So what cash flow statement does, it shows the way an enterprise has generated cash and the way they have been used in the accounting period. Okay. So it shows how cash has come in the business and how the same cash has gone out of the business and for which expenses it has gone out of the business. So that is your cash flow statement. Okay. See, it helps in evaluating the business transactions as per cash flow statement is identified as. Now listen, business transactions as per cash flow statement is identified as investing, financing, and operating activities. Okay, so cash flow statement may your transactions of business are categorized under three categories: investing activity, financing activity, and operating activity. Okay, so I'm just telling you everything in short. So you should know what is a cash flow statement all about. Next, notes to accounts and other statements. Okay, next is this notes to accounts and other statement. Other statement, I told you what comes in other statement. अदर स्टेटमेंट में फंड फ्लो स्टेटमेंट आता है. इज इट क्लियर? अदर स्टेटमेंट में क्या आता है? आपका फंड फ्लो स्टेटमेंट आता है. आई एम राइटिंग इट हियर. फंड फ्लो स्टेटमेंट. Okay, am I clear about this to everyone? What are these notes to accounts? Let us understand this. Now I will explain you what is notes to accounts. मतलब I'm explaining you this part. This. Clear? Is it clear? Just acknowledge it in the chat box. Balance sheet is clear. The new balance sheet. The revenue statement is clear. What it helps us to calculate it. Obviously, P&L account हम क्यों बनाते हैं? To know profitability. तो same. हम revenue P&L क्यों बनाएंगे? Obviously to calculate profitability of the company. Then third, I discussed with you cash flow statement. I told you what is a cash flow statement. It will help you to know how much cash has come in the business and how much cash has gone out of the business and for which expenses. And under cash flow, business activities are divided into three: financing activity, investing activity, and operating activity. Okay, fine. Thank you, students. So till here it is clear to everyone. Now I will explain this part. ये दोनों notes to accounts and fund flow statement. Okay. First, let us understand what is notes to accounts. Okay. So I'll be writing an example here down and let's see how much you guys understand. Any doubts, obviously you will ask me. Okay, look at the screen carefully. Say for example, my business name is ABC Limited. Okay, this is my company. Right? So revenues, that is sales. That's how much? Say around 50 lakhs per annum. So my revenue is how much? 50 lakhs per annum. Just a minute. Students, keep your videos on, otherwise attendance will not be given to you all. If the video is off, attendance will not be given. So it is better you keep your videos on. Even though if you're sitting for lecture and your videos are off, we will not give you attendance. We will assume you're doing time pass. Yeah. Harsh Doshi, keep your video on. Except for Vijay. Vijay has some problem with his camera, right? Okay. Okay. So your attendance is in your hands, students. If you don't want attendance, you can keep the video mode off. It's okay. It will be your loss, not our loss. Okay. Now let us come to this example. Yeah. So what example did I give? That the name of my company is ABC Limited. My sales is how much? 50 lakhs per annum. Okay. So now what happens is an auditor comes to my company. Okay. Say the auditor is Mr. X. Who's an auditor? A chartered accountant. So chartered accountant comes to my company so to audit my books of accounts. Right? Now what will happen? Say for example, to earn this 50 lakhs, मेरे कितने transactions were? Say in a year there are 5,000 business transactions. 5,000 business transactions means 5,000 journal entries and then posting them into ledger, then making a trial balance, and then finally making balance sheet. Do you agree to this? Any doubts till here? Just acknowledge it in the chat box. Any doubts till here? Okay, so what did I say? Auditor Mr. X comes to my company to do the audit of books of accounts, and he sees that to earn this 50 lakhs, the transaction during the year, 12 महीने में कितने transactions हो गए हैं business के, कितने 5,000 transactions. तो 5,000 transactions मतलब 5,000 journal entries. Okay. Then posting the journal entry into ledger, making a trial balance, and then making a balance sheet. Okay. So is it possible for this, what do you call it, Mr. X? Is it possible for Mr. X to audit all the 5,000 entries? Answer it in the chat box. Is it possible for Mr. X to audit all the 5,000 entries? Auditor just comes, not more than how many? Five to six visits से ज़्यादा auditor आता नहीं है. 5 maximum 6 visit में वो अपना पूरा काम कर देता है. तो तुम्हें लगता है in those 5 to 6 visits he will audit 5,000 journal entries along with ledgers and everything? Okay, obviously. Okay. Yeah. Vijay, Surbhi are saying, no ma'am, obviously not possible. So what will happen? Yeah, others start giving your attendance in the chat box. Students start giving your attendance in the chat box. Now what will happen is, the auditor has two ways to do audit. What will he do? 5,000 journal entries. He will not audit all 5,000. What he will do? How much is sales? 50 lakhs. So 50 lakhs ka say he takes around some 2%. Let me calculate. 50 lakhs ka 2%. is how much? 1 lakh. I repeat, 50 lakhs ka 2%, my answer is 1 lakh. Okay, so now what will the auditor do? The auditor will audit only those transactions which are more than 1 lakh. Are you understanding? Auditor will audit. He will check only those journal entries or ledgers which has a figure of more than 1 lakh. Okay, so this is what they do. What technique they do? They take either 1% or maximum 2% of the revenue. Okay, whatever answer they get. So my answer is 50 lakhs का 2% is 1 lakh. तो 1 लाख से ऊपर का जितना भी ट्रांजैक्शन है वो सबको वो चेक करें. Am I clear? This is called notes to account. This is called relevant items. This is called important items. Okay? See here. Now here I will explain you this concept, which is there in the CA textbook. See here. Was it what it is saying? What is notes to accounts? Present supplementary information explaining different items. See, supplementary information, मतलब additional information regarding different items of financial statements. Okay, they may contain additional information that is relevant to the needs of the users about the items in the balance sheet and statement of profit and loss. Okay, they include various other disclosures such as disclosure of accounting policies, segment reporting, related party disclosures, earning per shares, etc. Is this clear? Understood what is notes to accounts? So whatever are the relevant items of the business, okay, that is shown below the balance sheet. Okay, I repeat, whatever is the relevant item. So what is the relevant item? As per the example I gave, any amount above 1 lakh is the relevant item. Okay, so the auditor, the chartered accountant will say, show me the relevant items. So you should know what do you mean by relevant items. What are relevant items? Important items related to business transactions. And how do you generally calculate them? They are generally 1% to 2% of the revenue. Am I clear about this? Notes to accounts. Okay. Another statements में क्या आता है? Fund flow statement आता है. Okay. Now also notes to accounts में it will come. Say for example, you were following say depreciation method. How many depreciation methods are there? There are actually 16. But India में कितना follow होता है? Only 2 methods are followed. Correct? So say for example, 6 months back, I was following straight line method. And after 6 months, all of a sudden, I changed my decision and now I am following WDV method. Okay. So this is a relevant information. Yes, it is a relevant information. This relevant information should be mentioned in notes to accounts. Am I clear? Okay, so that is also called as notes to accounts. Any change in your depreciation method or any big fixed assets you have purchased, so that should be mentioned in the below the balance sheet. That is called as the relevant items. That is called as notes to accounts. Okay, say for example, I'll give you a best example. Your company may say employees were not tech friendly. So what did you do? You gave them tech training. Tech training matlab technology training. So in technology, while giving them technology training, you incurred an expenditure of say 10 lakhs rupees. Okay, so this is a relevant information. Yes, it is a relevant information for business transaction because earlier you were not giving such training to your employees. This year you gave the training to your employees, so it has to be mentioned in the balance sheet, below the balance sheet. I mean, not inside the balance sheet, below the balance sheet, it is mentioned as notes to accounts. So I mean that. So that is also called as relevant items. Is that clear to everyone? Okay. If possible, in the next lecture, I will show you one company ka balance sheet, and there I will show you what is notes to accounts. Balance sheet के नीचे ही लिखते हैं वो. Okay, that is notes to accounts. Am I clear to everyone? Do you have any doubts? Is the concept clear to everyone? Just acknowledge it in the chat box. We just have few seconds with us. The next lecture, if possible, I will show you a balance sheet, which is, given in newspapers. Okay. Then there I will show you what is notes to accounts. Okay. So next lecture, something new we will do. We will see this financial statements is beneficial to whom. We will see that in the next lecture. Okay, and next lecture we'll also see in detail what is this